Bank Negara has announced the 5 successful applicants for the digital bank licenses as approved by the Minister of Finance almost a month after the central bank's original deadline. The following applicants that are to be licensed under the Financial Services Act 2013 are a consortium of Boost Holdings and RHB Bank, a consortium led by GXS Bank and Kwok Brothers, and a consortium led by C and YTL Digital Capital. Meanwhile, a consortium of Aon Financial Service Co., Aon Credit Service and Money Lion, and a consortium led by CAF Investment will be licensed under the Islamic Financial Services Act 2013. 3 out of the 5 consortiums are majority owned by Malaysians, namely Boost RHB Bank, CYTL Digital and CAF, said BNM in a statement on Friday. GXS Bank is the digital banking group between Grab Holdings and Singapore Telecommunications or Singtel, according to Grab's filing with the US Securities and Exchange Commission in October 2021. BNM received a total of 29 applications from companies and partnerships across different industries with a mix of foreign and domestic applicants. According to the central bank, 4 levels of assessment were carried out, supported by a cross-functional technical team, a review team and internal independent observers from the central bank's risk and legal departments. The final recommendations to the finance minister were deliberated and endorsed by BNM's management committee. The successful applicants will now undergo a period of operational readiness that will be validated by BNM through an audit that may take between 12 to 24 months before they can commence operations. In a statement, BNM Governor Tan Sri Nur Samsia Muhammad Yunos said that digital banks are expected to further advance financial inclusion and that by adopting digital technology more widely, it will significantly increase opportunities for society to participate in the economy by overcoming geographical barriers, reducing transaction costs, and promoting better financial management. She adds that digital banks can help individuals and businesses gain better access to more personalized solutions backed by data analytics. Also, as businesses move online, digital banking also provides a safer and more convenient way to transact. Trading in Serbia Dynamic Holdings securities will resume on May 9th after a 6-month suspension. The stock was last traded at 35 cents on October 22nd last year, falling from 1 ringgit 61 in May when Serbia Dynamic's audit issues came to light. In a press statement, Bursa Securities reminded the investing public to exercise caution and make informed decisions when trading Serbia Dynamic securities. Bursa Securities said Serbia Dynamic's announcement dated April 21st, entitled Court Order dated February 7, 2022, had announced among others the findings from the fact-finding update in accordance with the exchange's order. Therefore, Bursa Securities said it will be uplifting the suspension of trading of Serbia Dynamic securities on Monday, May 9th at 9 a.m. Bursa Securities is referring to the 26-page announcement that the troubled oil and gas group filed on April 21st. It is worth noting that the Securities Commission had commented that the announcement made by Serbia Dynamic contained statements that are baseless and malicious and which may have the effect of misleading or confusing members of the public and or paint a negative image of SC and its officers. In its statement, Bursa Securities also stressed that Serbia Dynamic's comments, views and rebuttal in that announcement did not represent the exchange's views on the matter. Bursa Securities also highlighted that its original order required Serbia Dynamic, among others, to announce the impact of the FFU pursuant to the Special Independent Review on the group's business, financial status and operations. Bursa Malaysia had also required Serbia Dynamic to furnish bi-weekly reports of the SIR to the operator. Bursa Malaysia said that these requirements in the order have yet to be complied or satisfactorily complied with. Bursa Malaysia also pointed out that not only is the SIR not completed or finalized to date, but that next year SSY, the independent auditors engaged by Serbia Dynamic to look at its books, were not able to obtain sufficient appropriate audit evidence to provide a basis for an audit opinion. After Serbia Dynamic made that 26-page announcement, the SC came out to denounce what it saw as attempts to intimidate the regulator and undermine its authority and credibility. The SC also lodged a police report against the announcement to enable the police and other relevant authorities to investigate the matter, including for the offence of defamation under Section 499 of the Penal Code and or relevant laws. The Securities Commission's Managing Director Fu Lee Mei, General Counsel Chi Fei Meng, plus Executive Director of Digital Strategy and Innovation Chin Wei Min are understood to have resigned. However, it is not known what prompted each of them to leave the Commission. On Thursday, the SC announced the resignation of Datuk Syed Zaid Alpa, whose term was extended for a 3-year period in October last year. He was replaced by former Deputy Finance Minister Datuk Dr. Awang Adik Hussein, who will take over on June 1st. Fu, according to sources familiar with the Commission, had tendered her resignation recently. Meanwhile, Chi, who is also an Executive Director, has opted to not renew her contract. Chi, who joined the SC in April 2019, was the CIMB Group Legal Head prior to joining the regulator. Chin had joined the SC as an Executive Director in April 2016. Fu served as a Deputy Public Prosecutor with the Attorney General's Chambers for 6 years before joining the SC in 1994. Fu was instrumental in bringing air cargo service provider Transmile Group to court for accounting fraud which involved inflating its revenue with fake invoices. Fu encountered a similar case in external red-flagged audit issues of Serbia Dynamic Holdings over the past year. Following investigations by the SC and with the initial consent of the AGC, Serbia Dynamic and 4 of its senior executives were charged last year for submitting a false statement in relation to its record high revenue of 6.01 billion for the 12-month period ended December 31st, 2020. But about 2 weeks ago, the AGC decided to withdraw the charges following a letter of representation by the accused. The AGC has not publicly explained its decision. This left the SC with the only option to issue compound fines, and it did so on April 12th, imposing the maximum fine allowed of 3 million each against the company and the 4 individuals. Digicom saw an 11% drop in net profit for its first quarter of FY22 to 236.2 million from a year earlier as revenue declined on lower prepaid segment income and the telco registered a higher tax rate due to Cukai Makmur. Revenue for the quarter dipped to 1.52 billion from the 1.55 billion posted the previous year. Digi also declared its first interim tax-exempt dividend of 2.9 cents per share for FY22. The company's number of subscribers in the postpaid segment rose to 3.34 million, adding 249,000 users year-on-year through quality acquisitions, a low churn rate and a growing base opting for smart bundles and entry-level plans. In contrast, its prepaid segment shrank by 258,000 year-on-year to 6.9 million as Digi prioritized acquiring higher value subscribers. In a statement, acting CEO and Chief Marketing Officer Pravin Rajan said that Digi has seen good growth momentum to start the year, and as more COVID-19 related restrictions are lifted and borders reopen, the telco expects to see an increase in commercial and tourism activities that would drive demand for roaming services. He adds that the telco will continue to prioritize its efforts to deliver the expectations of its business and consumer customers from all segments by providing quality connectivity and better digital experiences. On the proposed merger between Celcom Axiata and Digi Telecommunications, the group says it expects the transaction to be completed within the second half of 2022 as the process of getting the proper approvals is still ongoing. Pestec International announced on Friday that its subsidiary CRSC is assisting in the Malaysian Anti-Corruption Commission investigation of a corruption case related to the MRT2 project. The group was referring to various media reports on the investigation by the MACC into alleged corruption by 2 engineering firms involved in the MRT2 project. In a statement, Pestec explained that CRSC is currently executing the power supply and distribution system package for MRT2. As such, CRSC has also been required to assist in the MACC investigation, which it says CRSC has rendered its full assistance. Pestec stressed that it subscribes to the highest standards of corporate governance and anti-corruption in every aspect within its organization and impresses onto its employees at all levels to have consciousness against corruption in all forms. To recap, Bernama in March reported that 3 directors and 2 former directors in an engineering firm have been detained by the MACC to assist in a corruption case investigation that is linked to the MRT2 project worth over 650 million ringgit. The case is being investigated under Section 16 of the MACC Act for soliciting and accepting bribes.